Hello friends, welcome back to my channel ITC India. Today ITC Hotels just declared Q1 financial year 26 results. Profit up by 54% and revenue up by 16%. But did these numbers beat analyst expectations? Stay tuned as we break down the key figures, stock reactions, management commentary and what it means for your investment. But before that, please subscribe to my channel ITC India. So Q1 revenue came in at rupees 815 crore, beating the expectation of 800 crore by about 2%. EBITDA rose by 19% year-on-year to rupees 246 crore with a strong margin of 29.9%. Profit after tax soared to rupees 133 crore, well ahead of the anticipated rupees 125 crore, another solid beat. So friends, ITC Hotels' fantastic result is also reflected in today's share price. It jumped 7% intraday to an all-time high of rupees 244.4 after the results. In July alone, it surged over 12% and nearly 35% since listing. Technically, it's maintaining a bullish trend, consistently holding its 15 days DEMA. So friends, let's discuss what management is saying. Though official earning call insights are pending, high-level commentary points to resilient demand across segments, with Q1 performance reflecting strong leisure and business travel recovery. Board approved for rupees 328 crore capex in Visakhapatnam, underscores strategic expansion. As India's third largest hotel chain, operating over 140 properties under Marriott Luxury Collections, Welcome Fortune, another ITC hotel, is tracking sector-wide recovery post-COVID. With a strong international and domestic travel resumption, it's outperforming broader FT hotel trends. Analysts project 20% annual earning growth and 12% revenue growth over the next 3 years. So let's discuss what investors should do. For long-term investors, results highlight a recovery phase and a strong demand trend. If you are bullish on hospitality, a buy on dip strategy around rupees 230 to 235 makes sense. Look for upside to rupees 260 to 275 in the medium term. For short-term traders, monitor support at rupees 235 to 240. A break below may open a slide toward rupees 225. A break above rupees 245 could trigger a fresh rally to rupees 260. So let's discuss some of the risks also associated with this. A Q2 sequential dip is possible due to seasonality. Economic slowdown or travel restriction could squeeze occupancy and profitability. Rising capex may impact near-term margins. To sum up, ITC Hotels delivered a strong Q1 financial year 26 beat, with robust year-on-year growth, margin resilience, and bullish price action. For investors bullish on India's travel and lodging sector, now may be a good time to accumulate with an eye on rupees 260 to 275. Traders watch those support and resistance level closely. Found this helpful? Please like, subscribe and hit the bell, and subscribe my channel ITC India. Share your thoughts. Are you buying the dip or holding until more clarity? Drop a comment below. Thank you. Jai Hind.